Hi, my name is Miller Hoffman, and welcome to another edition of Pocket Size Advice here at TradeWinds. Today's topic is one that you've likely heard about this year. A lot of investors have, and that's initial public offerings, commonly abbreviated as IPOs. So, what's an IPO? What are the ramifications for you? And what are the risks that are out there for you as an investor? What does this actually mean for you? Let's take a second and unpack it. What exactly is an IPO? Think of it this way: it is the first time that a private company is selling ownership of their company to external investors, which could be you or me. This is really the only time a public company receives the proceeds as a result of transacting, so like buying or selling shares. If you go out right now and buy Walmart stock, that doesn't immediately mean Walmart receives any money from you. It means the person that you bought the shares from actually does. An IPO is a little different. This is the first time that a company is effectively raising money to fund its own operations. SpaceX was a pretty notable IPO so far this year. Rockets and AI buildouts aren't exactly cheap. So SpaceX is effectively raising money by selling ownership of its company to external investors like you and me. This is a really popular way for companies to raise money, one being through ownership of its company. So think of it as you're buying ownership in a company that has initially started offering shares to the public. Now, this sounds really exciting on its surface, especially with some of the larger companies that are planning to go public this year, like Anthropic, SpaceX, of course, being one of them as well. The risk out there is something we should certainly talk about. You'll see a graphic on the screen right now that highlights a lot of companies that you and I probably interact with each and every day of our lives. Take a look at the returns over a 1 year period when these companies launched and went public for the first time. A lot of those are pretty scary returns for us to see as investors. Now, there's two different ways to look at this. One, oftentimes with IPOs, the hype overshadows the substance. So, making sure we really understand the company that we're getting involved in without being taken for a ride is a careful balance to strike. But it also means a 1 year period of an IPO doing poorly doesn't mean that the company is out of favor, or doesn't mean that you've made a poor choice as an investor. Remember, a lot of the companies that you saw on the screen were companies that are certainly still around and are probably generating record profits right about now. So being careful with amount of risk that you're taking as an investor is something we always want to talk about here at TradeWinds. And for more content or more videos like this, please give us a like and a follow. We try to do things that you would find really important or want to know more information about. Thanks so much.